Good morning to you, Andy. And I hear what Kevin's saying. I hear what Jenny's saying. Certainly on the quantity of content that they're putting out. The quality is sometimes a little bit questionable, but we're certainly watching it. They've certainly gotten me to watch more docuseries than I can count. Tiger King being the highlight of that maybe over the last year. But the thing now going forward, Andy, is a lot of their growth is taking place internationally, and it's hard to track that. But when we're looking at what they're doing here in the U.S., are they almost a mature company that's playing a little bit of defense here, protecting their very strong moat that they've developed?
Yeah, I think that they are. When LikeFolio looks at this, you're right. It's difficult to track all of the things that matter. So when we put together the data that we did for this show for Netflix, it's kind of a little bit of a choose your own adventure type of story, I have to admit, because when we look at the macro trend of just streaming content in general, and we're looking at all of these on a this year versus 2019 basis, because I think 2020, like Kevin said, a lot of an outlier type of situation. So we're going 2 years back. Generic streaming, so just people talking about streaming, cord cutting, watching over the internet content, up 96%, really very, very big. It's doubled in 2 years. At the same time, subscription fatigue, where we've seen so many of these new competitors come onto the scene, and I've got a Hulu subscription, I've got a Disney Plus, I think I've got a Peacock or the Office subscription, whatever that's called. I've got a lot of subscriptions, just like everybody else, but subscription fatigue has actually dropped 10%, meaning people are less likely to be concerned with the number of subscriptions that they have than they were 2 years ago, which is a really surprising number. And kind of the big one for me, the number of people talking about canceling Netflix has dropped by 33% over a 2-year period, and that's with some price increases thrown in there. Mm-hmm. Now, the big negative on this segment that I'm going to bring to you is, from an English-speaking standpoint. So this doesn't include a lot of the Asian international growth that Netflix is expected to turn in. From an English-speaking standpoint, we see new subscriptions down 35%. So I do think, Alex, you're right. This is a mature company. The growth rates that they've had likely aren't sustainable. I think this is potentially a disappointing number for Wall Street, and all of the others look pretty good from a retention standpoint, from a pricing power standpoint. I think Netflix has things pretty well under control. So it's really just which of those factors do you think Wall Street will weigh the most in their decision making? That's the way you have to look at this. There's a little bit of conflict here.
Andy, here's my question, and you see infinitely more data than I do on this. And is there a concept here where the difference in sagging numbers, like you report, and firming up, something that could turn that around, is that just more of a one really good show away from turning that around? Is there that kind of volatility in these numbers where one blockbuster movie or really good show that spreads like wildfire, is it that close to reversing, or do they need several to change these numbers? That's really the question. Can one do it, or is it you got to have a flow of good content?
Yeah, I think that the good content that they have, the consistency of the content is really good at building the moat that they have and the pricing power that they have. But in terms of bringing new subscribers onto the platform, I think you're right. I think it is more than just one good show. It's not just Tiger King, as compelling and as crazy as that was, but it's sort of Game of Thrones type content, or Breaking Bad type, Sopranos type, where it's just must see year after year. People have been talking about this for 2 years, so I now have to subscribe to this platform. It's been a little while since I've seen something like that out of Netflix, and I do think that is the driver of new subscription growth. It's one of those questions that we get from our hedge fund clients is this show potentially the next XYZ? And consistently, the answer's been maybe, but probably not when it comes to Netflix.
Andy, I almost look at this and I say, I'm not entirely surprised to see that they're not growing at the same clip when you're looking at kind of English-speaking, North American, maybe leaning kind of a demographic, because they have grown substantially. As we said, it's a little bit of a mature market. But to see that the subscriptions being canceled, or at least people talking about that, is going down, even though more people are potentially on this service, to me, the thing that they could do to potentially grow it is something that they're focused on now. Crack down on password sharing, get people to sign up for their own account, and then they're going to have basically a greater universe of people to sell this product to, at least in North America. We know overseas it's just getting into new markets, and they've certainly made a big inroad there. My question to you, though, is how is sentiment holding up? We know one of the differentiators is what we focused on with Jenny, which is the amount of content they put out, and kind of a little bit of something for everybody. They got reality TV, they got docuseries, they got movies, they got TV shows, they got nostalgic type things, even though they lost friends in The Office. That comes at a price. And as they became a mature company here, Andy, they're starting to turn the corner on positive cash flow. Can they keep up the pace at which they're putting up content going forward? And is that what has been so good to them a risk now, maybe going forward?
Yeah, I don't know. The consumer expectations that they've built, I think that's what you're getting at, are so high. And it's very difficult to maintain that pace. I'm not an expert on, streaming content production, but I think Netflix is a clear leader in getting it done. I think the other thing to, really keep in mind is that this company has a history of really nailing their price increases. They know where that break point is for the consumer, and they stay under that really consistently. And that money just drops, pretty much straight to the bottom line. So that's incredible pricing power that they have to 204 million subscribers. And I actually think that when we start thinking about Netflix's power to increase prices, it actually puts most of the volatility or risk in the streaming space on all of its competitors, because I think Netflix is probably the last one to get canceled out of a subscription bundle. And so the more of that wallet share that they take, the more it squeezes out the Hulus, the Disney Pluses, the Peacocks, some of those that you might have, kind of experimented with because they had one show that you liked. So that's also something that we're watching in this earnings report, is how they talk about the competition and how they talk about their pricing power versus the competition going forward.
I love that point. I think it's a strong one, and it's in many ways the staple within this space. As you pointed, maybe the last one to be canceled, and maybe price increases can have kind of a double positive effect for them. We'll see. A lot to unpack here. Looking forward to this announcement after the close. Andy Swan, the co-founder of LikeFolio.com.